I mean, on the seller side, I think if they can envision themselves on the other side of the table and say, okay, a buyer's coming in and they're going to do all these things to create value. What could I do myself today? So 3 years down the road, if the goal is, which it is in most cases, to get the most money as possible, the highest multiple and all those things, what can I do today? And most of it, everybody wants to grow revenue and make their business larger. But we kind of talked about, there's blind spots in every deal. The more of those a seller can eliminate, the more value they're probably going to be able to realize, right? Because at the end of the day, the more confidence buyers have in what's going on, the more buyers there'll be in an auction process, the more the asset should get bid up.
Welcome to the How to Buy or Sell a Business Successfully podcast. The concepts discussed in this podcast are for informational purposes only. No attorney-client relationship is intended or formed by this podcast. No legal advice is intended in the substance of this podcast. Feel free to check out our website, www.goforemanlaw.com. Enjoy the show and welcome your hosts, Jake Wayman and Sam Foreman. Hello and welcome back to another episode of How to Buy and Sell a Business Successfully. My name is Sam Foreman. I'm the founder of Foreman Law. Here on our podcast, we really want to help people have great deal process because we know that communities thrive when great deals happen. One of the best things going on in my life right now, again, I'm going to come back to my kids because they're just the best part of my life. So I love Marvel movies like our whole family does. And we have probably watched 20 to 30 screenings of different Marvel movies, of which 19 of those have been Shang-Chi, because that's our family go-to. And as you may know, they are rated PG-13 for a variety of reasons, one of which is profanity. And we have never, ever had a problem. Until now, yes. And so we're sitting there watching I can't remember. I think it was Avengers Doomsday or Infinity War, something like that. It was probably a little bit heavy for the kids. And Tony Stark's daughter says, "Oh," and then the S word. And then my 4-year-old says, "Oh." And it wasn't just once. Like, he's just saying it and saying it and saying it. And I'm like, I'm going to lose it. I'm going to lose it. My wife is going to be so upset with me. And I just cracked. And then he would just wait until I stopped laughing. And then he'd say it again. And then I'd start laughing again. And then he'd say it again. And it was so funny. I have a video. We will not release that to the public, but I'll show it to you guys after the episode. But that's one of the best things going on in my life right now. Joined by my co-host today, Jacob Wayman.
Thanks, Sam. It's felt like it's been a really long time since we've done this, actually. Anyways, I'll probably start laughing because of Sam and all the one-liners that he likes to drop. But like Sam said, my name is Jake Wayman. My wife and I are the owners of the Orange Theory Fitness franchises here in Wichita. Also work for an investment bank out of Oklahoma City called Infinity Capital Partners. We're a middle market investment bank helping mostly on the sell side of the M&A front. Also do a little bit of work with my family's company, which is Citywide Facility Solutions, and they do commercial cleaning, outsourced facility maintenance. So I kind of do a lot of different things, and I love every one of them. Funnest thing in my life right now is, so my 4.5-year-old is getting into golf. He's actually really good. So over Christmas, he got some new clubs from Papa, and we went out on Christmas Day because it was like 70 degrees and went golfing, and he was hitting really, really well. So we get back to our house, and I have some like little golf clubs with like these squishy golf balls, and he was hitting them, and he was topping the ball, and that's what I was doing on Christmas Day, and he straight up looks at me, and he goes, "Dad, I'm hitting like you." And he knew exactly what he was talking about too, because he was hitting the ball horribly, and it was so hilarious. And so, anyways, 4.5-year-olds, they'll keep you honest.
Yeah,
but yeah. So excited today to be joined by two awesome guys that I've gotten to know over the years. I've actually known Justin for quite some time through Leadership Kansas. Got to know Chris over the past year through some Infinity stuff. But I'm joined by Chris and Justin from Maple Hill Capital. But I won't steal your thunder, so I'll let you guys introduce yourself.
Sure. Well, thank you, Sam and Jacob, for having us today. It's an honor to be here, and we were talking earlier, but this is mine and Chris's first podcast. So for all you listeners, we'll do our very best, hopefully, to keep you awake.
We'll set the bar high
to do that. Yeah, so like Jacob said, we've known each other for several years. Actually did a couple deals together.
Orange Theory, actually,
back
yeah.
in the day.
Yeah.
So
Yeah.
yeah, and I grew up in Wichita. I actually my title technically is Chief Legal Officer with Murphin Inc. and David Murphin. Been with the family since 2013. So it's been a great run, and have done a lot of deals and have had some great experience. And one of the things that's come from that is starting Maple Hill with Chris. And so Chris and I have been working together since the end of 22. Is that right? Or 23. What is it? I don't even know. But
Into 22, close enough.
yeah, so we're excited to share details about what we do with Maple Hill. So I guess fun thing going on in my life, we're actually almost done with a 8-month long, which seems crazy, kitchen renovation. So I've got 3 kids. We've all been kind of cooped up in the house without a kitchen since July. So we're a week away. The Adley Krause is our GC. He's done a great job, so I can't blame him for the delay or time, not necessarily a delay, but we're excited to be back, kind of with our family and enjoying kind of being together. So
What's the first thing you guys are going to cook in the kitchen?
yeah, that's a good question. We got one of these ice cream maker things that my daughter's really excited about. So I guess
great.
we're gonna have to
Love
do
it.
that.
That's
Yeah.
cool.
That'll be great.
Hopefully it's not snowing outside when you
Yeah,
Who cares about this stuff? Kids will eat ice cream any time of year.
Yeah.
That is true.
Yeah.
That's great.
All right, Chris, take it over.
Well, yeah, Chris Brito, thank you all for having us here today. A little bit of background: I'm a Wichita native. Went to high school, same high school Justin went to, at different times though. But also went to KU, where Justin went to, but again at different times. After that, I spent a little bit of time in Dallas, doing investment banking. First for kind of a traditional middle market group, and then for a small oil and gas boutique. So they only focused on really upstream capital raising projects. During that time, my girlfriend from KU followed me down there and became my wife, and we relocated to Kansas City, where she's from. When I moved there, I took a job at another investment bank, kind of a smaller group, and spent about 8 years there. I have the number somewhere, but I probably around 20, 25 transactions. Most of them had been representing sellers. But during that time, had always thought about being on the investing side, looked at a number of opportunities, and ultimately, when one came up, talked to Justin, who I'd known, for a really long time, and that was kind of the genesis of Maple Hill. So we worked on that initial transaction through most of 22, closed it, in December of 22, so just over 3 years ago now, and that's what became Maple Hill. I don't know. I was thinking you guys have all much more exciting things than I have going on right now, but maybe on the kid vein, Tuesday, Christmas break ended and they're all back in school. So that's always, a nice relief and kind of get back into some normalcy and love my kids, but also, love when they're occupied with other things sometimes.
Yeah, the 2 weeks off mess with everybody's routine. I mean, and it was.
And
hard to get
we
them
had the
back in
Monday
there.
off too, so it's like 2 full weeks, and then they're just going to tease you by not starting
right
on
on.
Monday. So
Right on.
Yeah.
Well, with Maple Hill, so end of 22, early 2023, when you guys got that going, when you closed that transaction. Since then, how many more transactions have you guys been involved with? What's the portfolio look like today?
Sure. Yeah. So we've done 4 total platforms. So after that first one, which was a company called Warren Scope Mounts, we've acquired 3 other platforms, and then we've done 1 add-on for that that initial business, Warren. So 4 or 5 deals, I guess, in total. I don't know if you kind of want to walk through the portfolio and kind of what each of them does, or
Well, before you jump into that, I think
Sure.
we do have sometimes we'll have some early listeners on here. So can you describe what you mean by a platform and what you mean by add-on?
Absolutely. So, a platform is a brand new investment to the group that's unrelated to anything we're currently doing. I mean, it's basically an independent business we are acquiring. It's going to have its own management team. It's going to be structured in the way we do it in a single asset special purpose vehicle, an SPV. An add-on is when one of our platform companies is acquiring another company. So in the example I referenced, Warren Scope Mounts is our platform. We bought that. That was the acquiring entity of a company called MagView that went underneath it. So we're actually working on another add-on right now that, fingers crossed, will close this month for another one of our businesses. And again, our business, Wichita Sheet Metal, is the platform, and that's the acquiring entity of this other business.
Yep.
When you look like for somebody that's listening who's like, oh, okay, I might want to be a platform, like as a seller, what is it that makes a company a good platform?
Sure. I mean, I don't think we have the 4 or 5 hours we would need to just walk through all of those, but and I'll
3 days later.
Yeah, Justin chime in as well. But really, and every buyer's kind of different. Our focus has always been to find very good management teams or leaders that we can support. We like situations where we view it as, we have a partnership with that team or that leader. It's really their business running the day-to-day. We're here to support their vision, their strategy, obviously help in a numerous different ways, but be more hands-off. So a good platform for us is a company, and every company is going to have issues with it and challenges, of course, but we just would say, a solid operating business with a good team and, guys or gals that we feel are going to be good partners.
With a vision to kind of look outside of their geographic scope or, kind of what their product mix may be, as to go find something else to add on and opportunities. And I think that goes, one of the things that Chris and I focused on when we started was really taking the PE model and using kind of, I think, the good of a PE model, but saying, hey, what can we do a little differently where we're not as tied to some of the structure limitations, I would say, that traditional PE, I think, and funds have been used to. And so that was kind of, I think, something that's given us an angle to allow us to approach these management teams and say, hey, look, we can do things a little differently and allow them to share their vision and then go find opportunities. And we're not stuck to some timeline to say, hey, we'd really love to do this deal, but the life of our fund is limited by two years left. And so we have opportunities to kind of go and be flexible in that regard.
Can you walk us through what some of those traditional PE kind of restrictions are that drive those limitations of that model, and then how you guys are different?
Sure. Chris.
And it's look, just as to take a quick step back, when I was at my previous role, probably 90% of the buyers of the companies we were representing were PE funds. So we'd sit across, and I tell this story, which is a little bit exaggerated, but a group far in a process, and I'm sure you've walked through a lot of your listeners, there's multiple rounds to a process. So this group have been looking at our client's company for months at this point, and they had to pass at the end, which is always frustrating. And they said something along the lines of, great company, like what they're doing, we like the team, but they only have about 100 years of aggregate experience, and we can only do deals where they have 125 years of aggregate experience, so we have to pass. And, I say that a little tongue in cheek, but I would say that from a high level, there's just a lot of, rigid thinking sometimes and boxes they have to check because they have, they're very structured, right? So, a good example is kind of some things like that. Sometimes they're limited by what industries they can go into. The timing considerations are important too. I mean, at the end of the day, their clients are their institutional capital providers. They're in the business of raising and deploying money. Where we try to be different is we're deal people. We look at each opportunity, independent of anything else, and can kind of come into any situation with a white sheet of paper and say, okay, what makes sense for this opportunity? So I always say we compete on our flexibility, and can get our arms around things that others might be limited on. Another good example, just to throw something numerical out there, is things like customer concentration. A lot of funds are dictated and have certain parameters around the amount of revenue any single customer can account for in any one of their portfolio companies. It might be 40, it might be 60. Obviously customer concentration is always a risk, but we've looked at opportunities with pretty extreme customer concentration, and sometimes there's a story there. There's a reason why that team, whether it be resources or just it's such a good customer that they've built their business on that, why we would always view it as a risk. Of course, we can at least take a step back and say,
let's be practical
yeah,
about it.
I mean, is there
not
is there a
just
way?
write it off.
Yeah,
Yeah.
exactly.
I think one of the things we, buzzwords or something, when we started was, hey, let's find things that are kind of out of favor, opportunities. And that's always been I think value propositions. That's something that Dave Murphin is very strong on, never afraid of a sticky situation, and looking at opportunities that maybe others aren't willing to kind of get their hands dirty and really, look at with a different lens. And so that's been something that we've tried to, continue with each of the deals that we've looked at and done.
When it sounds a lot like yes, you guys say you're able to look at the deal, but you guys, it's more about the relationship. I mean, it's really what it boils down to. And I mean, that's one of the ones is, most transactions, they don't begin with the formal sale process. There's always a relationship is where it's built at. So, I mean, Ken, because you've done a handful of transactions so far, you've both been involved in a handful of transactions prior to Maple Hill. So kind of what are some, some origin stories that were really meaningful when it comes to, because you guys are looking at non-traditional or something that's a little bit different what private equity look like. Kind of talk through one of the stories you guys have been through that kind of ties into how you operate Maple Hill.
Sure. Yeah, I mean, I think you're absolutely right. So many things in life just are relationship, I think, driven, and the deal sourcing and opportunities as it relates to kind of what we're doing, I think, would fall right in along those lines as well. I think one of the ones, the first thing that comes to my mind is just our transaction with WSM, which is Wichita Sheet Metal here in Wichita, which I know you're familiar with. But the partner of ours in the deal, Austin Peterson, he's a guy I grew up with, have known for a long time. And funny enough, he and Dave Murphin were actually partners in a deal that Austin did when he first came back to Wichita, which happened to be the summer before I started working with Dave. So it's totally independent of my relationship with Austin. But when I got to Murphin, we were already in a deal with Austin. So he had run a search fund, which I don't know if you guys have talked about that on this
little bit,
podcast. But it's a great way for someone looking to find an opportunity, to bring investors in and have some runway to go find a business, basically. And so Austin had done that and acquired a business here in Wichita and moved back to Wichita to run this business. And so that was a success story. He ended up selling that business. And so Austin, we kind of kept in touch over the years, and he had built a relationship with another owner here, operator of Wichita Sheet Metal in Wichita. Austin really developed that relationship, but because of our relationship with Austin, when that opportunity came to fruition, he reached out to us and said, hey, this is something I'd really love to get done. I don't necessarily have the bandwidth, the capital really to do it. Are you guys interested in kind of helping me do it? So that was an opportunity that, I think right place, right time, obviously with the relationship we've had, the trust that he had in us in kind of getting it done. We worked with him on kind of getting that deal done. And I think, that took some flexibility. A lot of PE, Austin, because of his track record and his success, he brought some things to the table that we were willing to kind of work with him on and treated him truly as a partner in the deal versus us running the deal. And I don't know that a lot of firms would have been as flexible as that to get that deal done. And so, we closed that deal. at the beginning of 24, and hopefully, it's been a really good start. We're about to, on I think Tuesday, close, knock on wood, an add-on business up in Naperville, Chicago, where he's growing his distribution arm to a new market, which is really exciting.
Very cool.
That's great.
And so hopefully we get that done. That's, I guess, still confidential. But
Well, by the time this posts, hopefully it'll be in the news.
Good.
there we
Good
go.
point.
That's true.
Yeah.
And so
It'll be a while.
well, and so what you're kind of talking in that vein is this, and then maybe how, I don't know if your other investments are like this, but it's more like you have an operating executive, like a managing partner who has equity in the deal. Do you guys, are most deals structured that way, where you have that operating executive that's in there, that's got skin in the game more or less to be able to help run the business? I mean, how much are you guys involved operationally? Maybe that's a better question.
Yeah, I mean, I'll let Chris kind of speak specifics on that, but I think the other advantage in terms of what we're doing is every deal has looked a little different in that regard. So depending on the situation, we can be flexible. I think we will always rely on a management team and operator. We will not do a deal if we don't have vision on who can help us run that business. I mean, that's kind of a fundamental rule. For us, because we're just not, we don't have the bench to necessarily go out and do that.
It's a loser if it doesn't have a leader.
Yeah, exactly.
Yeah, that's exactly right.
But
We should go on a T-shirt. Another T-shirt idea.
Yeah, another T-shirt idea. We gotta
Loser
have
if
all
you
our
don't have
T-shirts.
one.
We need to have our own shop that has all our T-shirts that we would have on them.
You just hang
them.
them up
Yeah.
here up front.
Yeah.
so
Yeah.
people can see them.
We need a little
QR codes.
deal toys or something out there. Yeah.
Sorry, go
Oh, I
ahead.
was just going to say, it like Justin said, it varies by deal. And again, going back to how we can start everything with a sheet of paper, the first deal we did was owned by an independent sponsor, so it was professionally owned before us. So there was a complete team. They had internal controls, processes, procedures in place. So it's very different than the sheet metal deal, which was a family-owned business, right? They had done things their way for a very, very long time. And you needed someone like Austin, who was a good operator, who could bring a fresh perspective to things and help kind of take it from again, family-owned business to a professionally owned business.
But on that deal, I think Austin, not only did his experience, but the fact that we were in Wichita and could kind of really, say with a straight face, look, we're committed to this community. We want to run this community.
Right.
That resonates with an owner, operator in a community like ours,
especially
where they
Wichita,
care about their employees
Right.
and they want to
Right.
see their employees stick around and that we
Right.
had their best interest in mind. And,
Yeah.
and so that was a big deal. I'm not going to lie.
Well, and it sounds like, I mean, you guys do deals with a lot of real people in the real world. And I think that, a lot of our listeners, especially in the small business, lower middle market space, I mean, they're real people in the real world. They're not just, running a business based on, spreadsheets and charts and everything else that, when you get into bigger businesses where that's, where the primary source of accountability is. But, especially in these closely held businesses, everybody's scorecard's different, and they care about all these different things. And I mean, we talk a lot about, value creation is highly subjective for people. I mean, it's like, hey, what's on your personal scorecard? And when you're able to start with a relationship like you guys are, as opposed to it's all about the financials and, all that other stuff. I mean, I would imagine that that's a really good foundation to really get to know what matters to people, to really be able to create those, authentic connections that then allow people to engage with you in a different way than they might with a traditional PE that's just coming in saying, hey, here's our playbook, here's our model. Let's just kind of crank you through the system. Right.
Yeah.
We're gonna pay you in this particular way if things work out and all that, which is the right fit for some people. But I mean, for a lot of folks, I mean, it really starts with like, do you know yourself well enough to know what you really want, to where you can have that authentic kind of connection with a group like yours, and then you can create the value that's possible. Because a lot of people, I mean, they really do care. Like, what is that community impact going to look like? Are my employees going to still have that opportunity? I care about their kids.
Right.
What happens if this PE is really just going to kind of take this and outsource all these other operations? And they're going to run a skeleton crew here, but that's just not the same.
Yeah. I mean, that's such an, I want to steal a lot of quotes you said in there, the personal scorecard and the, do they know themselves well enough to know what they really want? because I just, going back to my prior life representing sellers, you could see over a 6-9 month sale process how some owners kind of changed throughout that,
Yeah.
and they'd start, once they got closer and closer to that end, they started realizing more and more what they thought.
Right.
So that's a very interesting, I've never heard a phrase like that.
Yeah.
So I appreciate that. But, in the last deal we did, a business up in Kansas City, again, family owned business. And a lot of people who had worked there for decades. And they'd even walk through the facility and they'd say, yeah, when so-and-so started, husband and wife team doing this, their kids were, children, they put all their kids through college. Now, their son helps us in this or whatever. I mean, it is cool to see that. And again, with the model we have, we can sit down and we can say, yeah, we're not going to move this. And unlike a fund where this is going to get resold in 3, 5, maybe 7 years, we can hold anything indefinitely if we wanted to. So it's easier for us to kind of give peace of mind sometimes to that.
Jake and Sam here.
Thank you for joining us. If you find this content helpful, please like, subscribe, share it with a friend, and especially leave us a 5-star review on Spotify or iTunes. Really helps us out a lot.
Yeah, 1 star, it's on Sam.
Yeah, it's definitely on me. Yeah, no, that's huge. I mean, when we're talking to sellers in particular, on the legal side of things, it's like when you have time, you have options. And I think that's where, when you talk about the rigidity of the traditional PE model, I mean, a lot of times it's very time bound. It's like, hey, we've got a 5-year hold period, or we've got a 5-year fund. And so everything is on this artificial clock, as opposed to like, I know this is going to shock people, but my crystal ball is really broken right now. Like, so broken, you guys. And being able to say, hey, we're going to look at how the value is changing, and we're going to focus on, kind of long-term value creation, as opposed to just how do I drive things as hard as I can to, meet this artificial timeline.
Yeah.
And I think that's a huge asset, and I think it allows you to lean into that relational aspect of things, just like you talked about, in ways that somebody else who's even going to bring very relationally feeling people to the table in a traditional PE model isn't going to be able to follow through on, because they've just aligned their incentives differently.
Absolutely.
And ultimately, those are the things that are probably going to drive how that relationship ultimately looks in a traditional PE context.
Sure.
But I'm curious, when you guys look at, like, especially platform companies, because I think a lot of our listeners, if they're growing their businesses, would really like to be a platform company. It seems like platform companies, from a valuation perspective, tend to do a little bit better than, not just in total dollars, but in terms of multiples.
Sure.
Better than like an add-on, for example. You mentioned some things I think are really important for listeners to key in on, good management teams. And I assume that means, like, hey, either you've got to really like the founder or the owner, and they've got to be willing to commit to some sort of long-term period, and this is, I would imagine, probably a better situation. They've got somebody that can just be loyal to you, or that employees can just be loyal to, that's going to work for you, as opposed to, the kind of the founder really carrying that strong presence still into the room and not really being able to kind of transition in the same way. What are some things that are like red flags when you look at, like, management teams, when you're looking at platforms where it's like, this just doesn't work. This doesn't fit.
I might start with the opposite, because it leads to what the red flag is.
Sure.
But, in every business, there's going to be, bogeys out there. There's going to be things that, are issues. I mean, nobody has a perfect business, right? So you're kind of talking through things when,
Except for Maple Hill. Go on.
we got a long list.
Yeah.
When they're just open and upfront, hey, this is something that I know we could do better at, or we've had challenges with this. And they start identifying those things, because ultimately what we're trying to do is come in and help improve on those and give them resources to help, as I used earlier, professionalize them or grow, open new markets, whatever it might be. So the opposite of that is when you are asking questions, people clam up, get defensive, things like that. It's
Right.
like, okay, well then we probably need to keep pulling this string and see what we find. And that's always a little bit of a concern. But it is tough for a lot of these owners, right? And in many instances, this is the first time someone's, really got under the hood with them and looked at things, or even just asked questions potentially.
Yeah.
Some people respond really, really well to that, and it's great and can be a conversation. And a lot of times it's maybe not even something that's negative. We just want to understand. But others who are, very cold to that, it usually just suggests that it might not be right. So I would say that's kind of a red flag. And,
Right.
The other thing we try to do a lot of is not just talk to the owner, but, his supporting staff and their lieutenants, right? And see if is everybody kind of saying the same thing. And, certain times if we're, and I get it, in a transaction period, pre-closing, you want to keep the tent really small, and who knows about the deal. Employees are usually nervous when they find out, all those kinds of things, customers, vendors, all that. But we still want to have at least something of a group of people we're all talking with. So when that's limited, again, just I would say the degree of openness that they are with us is pretty key.
Yeah.
Right.
Yeah.
Yeah, because information is such a critical part of making great decisions that lead to great value. And if you're a seller and you're going to too tightly restrict or filter the information that the buyer can have access to, especially when you're working with experienced, sophisticated buyers like a Maple Hill, for example, you guys are going to know what you're not getting, or at least that you're not getting something. And so as a seller, you either fill in the gaps, or you create a scenario where the gaps are identified and they have to kind of fill them in on their own. And at some point, there's just too many gaps to get comfortable.
No, I agree with all that. I think, something that's sometimes overlooked or it to me is kind of culture driven. And I know that's, kind of a general term, but we go through these management meetings, we get to spend time with teams and typically do kind of walkthroughs, through the plant or, through the business. And I'm always kind of antennas up, hanging back, and just kind of paying attention to kind of how the employees, respond when, the owner or, president is kind of walking. And just to me, to see kind of how that interaction is. And to me, because culture is really hard to change when we get in, right? I would much rather have kind of a culture of, hey, we're all in this together. We're kind of working, to pick each other up versus, hey, it's, you versus us type deal. And you can kind of pick up on that. And I think in some ways, when you're talking with owners, if they've allowed their kind of lieutenants, if that's how we're phrasing it, to be empowered and to kind of take responsibility, to me, that is a good sign that, hey, this business is in a good place. There are people that are engaged and have, real, ownership in what they're doing on a daily basis. And to me, that's a sign of a good leader.
Right.
And so those are the kind of soft things that I try to pick up on that aren't going to necessarily show up on paper, but I think that's important when we're on this side of the table looking to make an acquisition.
So when you're doing that evaluation and you say, hey, like, this is a good leadership team, a good founder, he's built a really great company, great culture, what's going through your head? Like, hey, we want to get this deal done, but how do we keep this type of momentum moving forward afterwards?
No, that's a huge deal. And that's a big piece of what we're doing. We want to be aligned, at least in terms of incentives, with our management team. And I think we try to communicate that on an early basis, like, hey, this is, if we continue to kind of march down this path together, you're going to be right there alongside us at the table in terms of kind of, the upside relative to a potential sale or profitability and things like that. And so we really, we will lean on them to tell us kind of how they want that to look. We kind of have a box, so to speak, in terms of where we can play, but it's pretty flexible on, hey, we've got a bunch of owners. Like the first deal we did, we gave everybody who didn't have ownership before, we said, hey, if you guys want to come in on the same value, everything, we'll let you participate alongside us. We'd love to have you on the cap table. You guys have a voice right alongside us, and here we go. So, and I think, the employees that want to be there and they want to have a stake in the game, and we love that. So,
well, and that's something that I think Chris had been sure to like. It's going from a family owned to a professionally owned, and that's the difference, because family owned, the ownership's going to stay in the family.
Yeah.
And they may respect the family, they love the family, they're going to work for the family, but they're never going to be an owner in the company.
Correct.
And when you bring a piece of the puzzle with you coming in with Maple Hill, like that's what you're saying is like, hey, no, we're professionally ran and we want you guys to participate. We want you to be involved because you've helped grow it to this standpoint.
Absolutely.
So, I mean, that's an incentive from an employee standpoint to say, hey, like, I'm worth something. Like I've been a part of something, and now I can be part of even something more too.
I think
Absolutely.
I think so. Yeah. Are there other examples? I mean,
No, I mean that was probably the best one, and some people participated in very small, meaningful for them, but most, I think a lot of groups just would say, no, if it's not this minimum, we're not going to mess with it. But yeah, you want the people alongside you thinking like owners and thinking like partners, because that's when when it's yours, you care more about it.
Yeah,
So,
right.
How often do you involve the founder of the company who was selling it? How often do they stay involved post close? Are they involved with the rolling equity, like, or is that kind of is it different every time? How do you guys look at that with having their involvement after post close?
Again, differs every time. Most of our situations, the seller was exiting the business and using it to do that. So they've either had kind of a supporting bench who is now the leadership team. Or in the case of, the Wichita sheet metal deal, we had a partner kind of going in. But yeah, I mean, our ideal situation is where it is an owner who, and in today's world, you kind of got to take two steps, right? I mean, it's hard to sell 100% at once. So they're looking to, take chips off the table, stay involved. Hopefully we together can, create a lot of value. And then if they ultimately want to exit all the way, we can provide that potentially, or if we decide as a group to, take it to market and have a new outside owner, we can do that as well. So it is a mixed approach. I mean, again, though, we want our teams to think like owners, whether that's rolled equity or in the case where that doesn't really exist, incentive structures that align with us.
Yeah.
Yeah. I just want to reiterate one of the points you talked about culture and about sort of the delegation of decision rights, and sort of that decisional velocity that goes through a business. For a lot of small business owners that are listening, I mean, really pay attention to that stuff. We talk a lot on this podcast about the transferability of value. If you're an owner and you have micromanaged all the decision-making rights and it's all tied up in you, and a buyer comes in and looks at that, I mean, they're very quickly going to identify that, hey, I can't transition all of this value, or the value that I can transition, I'm not willing to pay as much for, because it's so locked up in one individual.
Right.
And that, especially for folks that are looking for the scalability, because like you said, you're not just buying it because you want to maintain exactly where it is. You're buying a business because you have the opportunity to grow. And if your foundation has built-in constraints because of how, decision-making authority is allocated either through written policies or through culture, then you're inherently going to put a cap on that upside that a buyer is going to be able to identify. And that is going to limit your upside, whether it's at the deal table or through aligned incentives afterwards. So just keep paying attention to that, listeners, and look at that in your business. And
I think that's a really good point. And I think it's a really hard thing for, business owners.
As someone who's definitely not a control freak.
Right. I mean, I live with that every day. So, I mean, I get it. But I think that's where you continue to, strive to surround yourself with great people. And then it kind of naturally happens when you've got other. Don't be afraid to bring smarter people to the table. I think that's what I would say, because that kind of lifts all boats.
If you're the smartest person in the room, your head is already at the top of the ceiling.
It
didn't get any higher than that, right?
Yeah, and on that, there just has to be a huge degree of trust, and I think culture, we talked about so many different things in here, and at the end of the day, I think it kind of bottom line trust is what we're all talking about.
Yeah, yeah.
I mean,
Yeah.
'cause
Right.
you're never, if someone's a bad actor, no legal document's going to protect you from everything that could go
100%.
wrong. And, if you really trust the person, then ideally sign the purchase agreement, put it in the drawer, and never have to look at it again.
Yep.
So that's ultimately what it comes down to. Because, no one's ever going to know everything.
Right.
And if you have that trust,
Yeah.
you can let the teams do what they need to do. And then when you come in to make decisions, it's a two-way street,
Right.
as we talk about add-on, where we typically get involved in more strategic level decisions at the companies, major refinancings, major CapEx type purchases, add-on acquisitions, executive level hires, they have to trust us and how we're thinking about it too. So
We'll kind of talk about that. What does your involvement look like? Say, here we are in Q1 with your companies you guys are in. Like, what's your involvement from your level? Is it like, so maybe you're more involved in WSM, you're more involved in allied materials? Like, is it kind of, you guys like see where you want to, who kind of has the position to talk directly with the team? Like, what does that look like on a day-to-day basis?
That's a good question, Jake. So far, we've we're in the process of building our team and actually have someone starting on Monday to kind of help with some of these topics. But we've been kind of aligned, I would say. I mean, when it comes, Chris does a great job leading the firm, no doubt about it. And I'd say he's most engaged. And we've got an analyst, Jason, who does a great job and is definitely in the weeds more on a day-to-day basis than Chris and I are. But we try to be, on any major decision, I would say, and even on the weekly kind of conversations, we've been involved together, and I think that's a big deal. I mean, part of it is we're new, and we want to learn how each other operates. But I do think there's value in showing kind of the flag, so to speak, and being present. I think, I'm all over the place. Chris knows that. So I'll take calls from wherever. But I think being present and knowing, having the management teams knowing that there are issues that pop up, and some of them aren't fun to talk about, but they know that we're going to be there. And look, that's part of our job, is to kind of be a shoulder to lean on in some cases. And that's, you can't do that unless you're there. So I would say our involvement has been, especially with the management teams on weekly or monthly or quarterly basis, whatever frequency it is, we try to be present.
Yeah.
That's not on a day-to-day basis, because we let kind of the teams operate and do their thing. But when we get involved, we try to do it together. Yeah. That's what I would say. That's a long answer.
Yeah. Well, you're not in the ivory tower. You're not just like this group that's just is the owner of the company. No one knows who they are.
We're pretty
or
involved.
Yeah,
I would say. And maybe that doesn't work with a lot of people too. So that's just something to think about. I mean, when
But it kind of goes back to the relational angle as well.
Mm-hmm.
I mean,
Right.
I think that, one of the things we flag for clients all the time in the legal space when they're looking at that buyer is trying to look at, hey, here's what the deal says, and then here's what the person at the table says.
Yeah.
And then how is this going to change, and do the two line up?
Mm-hmm.
Right.
Yeah.
Like, basically, do you have the sales guy at the table trying to close the deal with you, presenting one thing, wanting to make you feel a certain way so they can get what they want from you?
It's a marriage.
Or do you really
bottom
have,
line?
or do you really have somebody there that's like, no,
Yeah.
this is who I am before, this is who I'm going to be tomorrow.
Yeah.
I'm still going to be involved. That sort of relational thing. Because for some people, it's like, hey, I had that warm relationship all the way up to closing, and then that person disappeared.
Yeah.
And then it's the analyst who's like, busting
guy.
my you-know-whats to...
Yeah.
Well, in our process with Infinity, and Chris, you went through this too as well on the investment banking side, and now you guys are on the PE side, is those management meetings. Like, that is so critical, because that's your dating time. Kind of talking the 10 analogy, you're going camping together, and you find out a lot about people when you go camping.
Sure.
And that's a way to...
Or playing golf.
Yeah, playing golf. Anyways, whatever it is, you learn a lot about the person and who you're doing business with, because, again, I think, they can fundamentally look great on paper. Their finances look good, lots of things look great, but then you get to know them as a person. You're like, man, they're a control freak, or they don't treat their employees very well, or like, man, I really like this person and we're getting along great. And like, this is going to be a great process and we're going to go through with it. But like, I think those are so critical. Like, got to look good on paper, yes, but then you got to also see like, hey, what's this person like, and how are they treated in the community? Because it may be in a
100%.
city that's not here, and you go in and like, man, they have a really bad reputation in this community or whatever.
Right.
Yeah.
Or the flip side, again, back to maybe they have some really small customer concentration, but they're a great business owner, take care of their employees, and the story that's being told there is something different when you meet them in person.
Right.
Yeah.
It's like the
100%.
financials tell the story, but the culture tells the truth.
Yeah.
T-shirt.
Another.
Yeah, man. These are.
Yeah.
Well, but I mean,
We got a flag company, by the way.
Yeah,
so
there we go.
can
Yeah,
make-
we're gonna-
Well,
we
I was
can
gonna
make
ask,
big
like it
flags.
was like flags and puzzles. Flags
Yeah,
and
yeah,
puzzles.
Yeah.
Yeah, but I mean, when you're looking at it, I mean, I think about like when you look at like how value is created, I mean, sometimes your financials will tell you like, hey, there's an opportunity here, right?
Right.
But then your culture will show you that this is why it's limited and why we can't change it. And I think you alluded to this earlier. There's very few things that are more difficult to change than culture.
Right.
I mean, you're better off like from a buyer investment, standpoint in many cases, just going and finding a better business
Yeah.
based on the amount of time and
Which
resources.
is sometimes hard to come
Right.
to that realization, like
Right.
because you're seeing it on paper and you want to make it work. and you're
Right.
Like,
Yeah.
this
Right.
just isn't
And it's
fundamentally.
here's
gonna work.
another
So,
T-shirt line, but it's like
Yeah.
as I'm sure you guys are really good at, but I mean, especially for listeners, it's so important. You fall in love with the destination, not the deal.
Right.
Yeah.
Because as
Yeah.
soon as you're more committed to the deal than the destination, it's like your brain just we're wired this way as humans, just starts constructing and filling in the gaps to make it look as good as possible, as opposed to holding yourself accountable to no, where I really want to be is this,
That's a
in this
great
place,
point.
and
Yeah.
I'm not gonna fall in love with the deal because I know and I've defined for myself. It kind of goes back to that scorecard kind of thing when you have created that accountability for yourself at the front end to know this is what I want.
Yeah.
You can kind of hold that up and create a little bit of that accountability through the process.
Now I'm
But-
envisioning you on some beach somewhere with
Somewhere.
with an umbrella and a drink in
Yeah,
hands.
yeah.
So.
with like the Peanuts cartoon, 5 cents for
Yeah.
corny M&A lines.
Yeah.
But guys,
Yeah.
thank you so much for joining us
Yeah.
today and
Yeah.
taking your time. Would really value from you if you'd share with our listeners what's one great tip that you have for buyers and one great tip that you have for sellers that you'd like our listeners to take away today.
Yeah. Well, again, thank you guys for having us. It's been a lot of fun. On the buying side, I would just say, you've got to be patient and really, look at a lot of opportunities, which I think a lot, when I see younger guys or guys looking, they focus on, hey, this works. It's in my town. This is going to be a great fit. There's some things that are really good about it, and then some big red flags that they seem to want to overlook. And I think it just takes time to looking at opportunities and really going through, a number of pitch decks, a number of, meeting with management teams. And you learn so much just in doing that. So, one of the things we look at a lot of opportunities, and then we also are not afraid to go meet with teams. Even, we don't ever want to make an offer unless we're extremely serious on getting a deal done. But I think there's huge value in meeting with management teams and letting them challenge you, and don't be afraid to be challenged. And so I'd say be patient and not be afraid to be challenged. That would be what I would say. So
It's great advice.
Absolutely. And then, I mean, on the seller side, I think if they can envision themselves on the other side of the table and say, okay, a buyer's coming in and they're going to do all these things to create value. What could I do myself today? So 3 years down the road, if the goal is, which it is in most cases, to get the most money as possible, the highest multiple and all those things, what can I do today? And most of it, everybody wants to grow revenue and make their business larger. But we kind of talked about, there's blind spots in every deal. The more of those a seller can eliminate, the more value they're probably going to be able to realize, right? Because at the end of the day, the more confidence buyers have in what's going on, the more buyers there'll be in an auction process, the more the asset should get bid up. So some specific things, make sure your numbers are clean. Be audited.
Yeah.
Right. Your bank might not require that, or you might not even have debt, but do those exercises now. Have an if you don't have a full-time, CEO, you just have CFO, you just have a controller, get someone in there, doing those things that are kind of day one, first 100-day PE projects. Is your IT stack correct? Pay some money and make those investments today, so that when you do go to market, and the other thing I'd say too, which is a tougher thing to solve, but have that kind of supporting bench, because as we talked about, if everything lives with you, that's a lot of key man risk for the next buyer. So if you can delegate some of that out, again, those are all kind of, day one PE type initiatives. But if you do and are able to execute on some of those yourself, you're going to retain that value at that point.
Yeah,
I think.
Absolutely.
And again, be very open and honest. Everything's going to come out eventually.
Yep.
And it's a lot better it comes out for everyone's sake before closing than after closing. This is how I think about it. So
No, I think that's so good. And I mean, for sellers, the value that you receive is not primarily based on the value you hold. It's primarily based on the value that you're able to actually deliver to the buyer. And so if you just, as Chris said, if you go through that process of figuring out how can I position my business to be able to deliver as much value as possible, you'll be able to exchange a great deal of value. But if you're in a position where it's like, hey, 80% of the relationships, 80% of the decisions are all me, and you find a buyer who's like, I don't really want you to work for me. Like, you've inherently put a cap on the value you're going to be able to get. So, guys, thank you so much for joining us today. This has been hugely helpful. To all of our listeners out there, we hope that you enjoyed this conversation as much as we did. Keep after it. You're building the businesses that really help our communities thrive. And remember that communities thrive when great deals happen, and what you're doing really matters. So keep after it. Have a great day. Thank you for joining us today. For future episodes, please subscribe to the podcast on Apple Podcasts or Spotify. And please check out our website at www.goforemanlaw.com/learning.